Yo, what's good, everyone? Today we're going to be going over good versus bad IFVG setups. I got this little Google slideshow ready for y'all. We can just hop right into it, not trying to waste anyone's time. So what are the characteristics of an inversion fair value gap? Well, there are three main things that I look for. Obviously, there's more than this, but this is all you're going to need in classifying good versus bad. Number one thing, the manipulation. It all starts with manipulation. What is every move, right? Your inversion comes after we sweep below, after we hit that high time frame imbalance. Manipulation is number one. Then it's the close, which is just like how healthy of a close is it? Is it close to your break even? Did we close above the gap a lot, a little, all that stuff? And then the targets, where are we going to, right? Pretty simple. So what do I look for in manipulation? Well, obviously the where. So where can we manipulate? What's like that criteria that you're looking for? Number one thing is going to be that high time frame key level. This will be like 15-minute fair value gaps, 30-minute fair value gaps, 4-hour fair value gaps. You get the point. And then what do I mean by significant liquidity sweep? I'm not just talking about like a random high, a random low. This can be session liquidity, previous day highs and lows, or significant swings on the high time frame, such as swings within a fair value gap known as intermediate highs and lows. Those are a very significant liquidity pool to sweep. So that's what you'd look for, not just like a random high, a random low, especially on like the super low time frame ones. And then the SMT, this is like the cherry on top. Obviously, it's good without the cherry, but you know, who doesn't want a cherry with their fucking milkshake, right? Reaction. So how do we react to our where? How do we react to our high time frame fair value gaps? How do we react to sweeping that liquidity, right? Do we print wicks? This is what I'm looking for. Okay, are we printing wicks inside of this key level that I'm looking at? Are the bodies respecting my fair value gap? Are we respecting the CE of the fair value gap? Just look for how price is reacting to your point of interest. And then high time frame alignment. Obviously, no trade is going to win if the high time frame is super bullish and you're taking a bearish setup. It's just not going to happen, right? The low time frame will lose every single time. So obviously, base that manipulation with the high time frame trend. If we're bullish, find bullish manipulation. So, and then PO3. What do I mean by PO3? I'm really just referencing the time aspect of trading. Did your manipulation happen after a high time frame candle opened? All right, you don't want your entry at 9:29 because what happens at 9:30? Well, it's market open. It's a 30-minute candle. Manipulation happens, so you don't want to get reswept, you know. And this ties back into like having like the where, right? And then 10 a.m. 4-hour candle, you don't want to get swept out. And the same thing goes for 10:30. It's a 30-minute candle. So after a high time frame candle open. If you have more questions about this, I have a video up on it. I'm not really going to dive super big into PO3 this video, so check that out if you're curious. This is the close of the fair value gap. Number one being the strength. Is the body or is the candle mainly a body or large wicks? So I'm actually just going to skip ahead to these examples. What I mean by this is look at this inversion right here. See how and this is the bad examples. See how the majority of this candle is a wick with a very, very small body. That's what I'm referencing here. It's this one. Yeah. So is the candle healthy, right? Is it a healthy close? And then how far above and below did we close to the fair value gap? I'll go into that in a second. But basically, did we close above by a tick or did we close above by a few points? Like, is it just like a very tiny, tiny close, or is it obvious? Is it noticeable? And then the speed, the time it takes to close relative to the time frame fair value gap present. So like, obviously, I'm not expecting like a 5-minute fair value gap to close like on the first candle. I usually let 2 to 3 candles relative to that time frame to close. So if it's a 1-minute fair value gap, I would give the inversion like 3 minutes, max 4, but the close, like if it takes 4 minutes, everything else would have to be super good, such as the strength. Like the close would have to be really nice. But I'd say if it takes more than like 3 or 4 candles relative to like that same time frame candle, then it's no longer worth it. And then another thing to take into account is the duration between manipulation and distribution. So if we end up hitting this high time frame key level, we sweep and we have an SMT, but then we just kind of chop around. We don't really do anything. And then like 5 minutes later, 10 minutes later, then we start moving. To me, it's like, all right, maybe I'm on the wrong side of the market, because you want that speed, you want that strength with your inversions. And then the BE, nothing too crazy. Like this isn't really like super significant, but just how close is your break even point? Like I'll avoid an inversion if it's like a few ticks away from my break even, because you're basically just asking for a wick back into that range and then you get out. So it's like it's not even a trade. And then the RR, obviously, you want a positive RR. That's really the only thing. If you can get a 1-to-1, if you can, like, let's say your 1-to-1 is slightly above your target or your TP, it's just like a few points above, that's cool. But if it's like you can't get any good RR at any point, then chances are that setup's not for you. Next up, we got the target, starting with the why. This is the logic of price. Why should that liquidity be taken? Why should we rebalance? Why should the low that I'm saying is our manipulation be our manipulation? This one is where most people get wrong. It's really just understanding market moves. But like, why should that liquidity be taken? An example of this would be like, okay, well, this liquidity pool should be taken for one, it's low resistance liquidity. We just swept previous day low, hit a high time frame imbalance. And we're only printing wicks to the downside. And then why should we rebalance? Well, we should rebalance because in the past hour, price hasn't made any significant retrace. If you trade mech model, you'll understand this second one the most of why we should rebalance. Whenever price is just running, creating open imbalance after open imbalance, and there's no point are we running into those or rebalancing that range. Given that now we have this new manipulation where at our key levels, it would be a valid idea to assume, all right, we hit all of this important stuff. We're clearly reacting. We should rebalance this range either to unmitigated gaps or to equilibrium, just to rebalance. And then why should this be our manipulation? Why should the market not trade back to this low? This is usually I base it around like, okay, there's no point. Like there's no liquidity at this low because it was just swept. So there's nothing there. And we filled an entire imbalance. So there's nothing to rebalance lower, and there's no liquidity to run to lower. So there's no point in taking this low, hence why that should be our manipulation. And then this is just the other stuff like low resistance liquidity. What is that? Unswept liquidity. This is like trend line liquidity, equal lows, equal highs, relatively equal highs, all that stuff, failure swings, blah, blah, blah. Basically, liquidity imbalances you would highly expect price to trade into. And then high resistance liquidity. This is something you never want to target. It's previously manipulated liquidity. So if you just go here, you don't want to target highs that hit a key level, had a significant liquidity sweep, and distributed. That's a big thing. Or just SMTs, like as a rule of thumb. So like led to distribution, that is a pretty important part. And this is liquidity you don't expect price to ever trade back to until way later. And then low-hanging fruit. This is my favorite thing to target because it is the low resistance of low resistance. So I usually base this around, like, obviously this is kind of hard to explain, but let's say your high time frame draw is just a swing. Your low-hanging fruit would be a low time frame swing that price must take out in order to get to the high time frame target. So basically just like a target along the way that's very, very obvious. If you watch my back testing, you see a lot of the time I'm targeting low-hanging fruit, and it literally just prints. So this is the target. Now, what are some examples? Because I know that this is what y'all are wanting, the actual price. So we have 4 examples here. Why are these inversions good? Well, we'll go one by one. This first inversion, why is this good? Well, the 30-minute key level is still being traded into. This is the 5-minute time frame. I know we closed through it, just ignore that. On the 30-minute, it's simply just printing wicks, but you clearly see price respecting this gap time and time again, except for one closure. But what do we do after we sweep significant liquidity? This is a 930 low. Well, for one, it's a pretty fast reaction. This candle immediately closes above. This candle nearly inverses, but then closes below. And then this next 5-minute candle does the damage, right? We get a very healthy closing above the gap. It's very indicative of the direction. It's not saying, okay, I don't know where I want to go. I know where I want to go. And then you can also look at the targets up here. This is just slanted highs. So this is a very good setup. And then you can see it over here as well. You see it over here. Oh my God. What is this close doing? Well, we wick up, we take out these highs, we hit that 15-minute gap, and then we immediately close through the gap. And it's not a bitch close, right? We have one candle print a wick, and then the second candle burns through it. It is telling you, I want to go lower. I'm not respecting this bullish gap, and I want to respect this 15-minute, bearish gap. And on top of that, you're targeting those low resistance targets. And I'm pretty sure below this low, we had a draw here. So like this would be my low hanging fruit. So yeah, very, very good example there. And then these last two, it's basically just the same thing, right? Wick into this 2-hour gap, we put in an SMT, so that's good manipulation. We have a significant stop hunt of all of this accumulation. We have an SMT, we have a high time frame key level, and then how do we close? Well, we close fucking perfectly. It's like the gap is not there. This immediately reacts out of our key levels. We nearly close through on the first candle, but then we finish it with the second one. So price is clearly saying this gap is damn near non-existent to me. I know the direction I want to go to. And then look at obviously all these targets. That's such a good setup. And then here, same thing. Sound like a broken record here, right? Tap into that gap. We put in an SMT. That's good criteria. And then what do we do to the gap? We instantly close through it. There's no question here. The price is not saying, oh, let me respect this gap a little bit. Let me do this and that. No, price is saying, I want to burn through this gap because I want to get to these lows. And then you obviously look at this low. These are swings prior to my high time frame draw, right? So how I was talking about low hanging fruit. If my 1 hour sell side liquidity is here and my low time frame targets are here, this is going to be my low hanging fruit. Notice how we took it out in one candle. And then to take this high time frame draw, we have a little bit of chop, right? I don't want to hold through the chop. I just want to get my bread and leave, right? I don't want random break evens. I don't want losses that edge my full TP and then come back and fuck me. So I'm going to take what I know is guaranteed. And sure, yeah, we can trade to this high time frame draw or not. I don't care. But my low hanging fruit got taken. So these are some very 4 good examples. What are the main takeaways? How fast we close, where we manipulated, and what the bodies are telling you. Or like what the candles are telling you, I should say. Like here, we have one wick down. We put in the SMT, instant reaction. Right here, we wick above. We hit this 15-minute fair value gap with a 30-minute open, that time part I was talking about as well. You can see the example here. And then we close right through. The main thing here is the close. It's like to obviously the criteria is there for the most part. Like y'all are good with criteria. But it's the close that a lot of people mess up. That is the main takeaway I want y'all have here, right? How are we closing through this fair value gap? What's the speed of it? What does it look like? You're going to see what I'm talking about in number 3, bad inversion examples, right? All of these have what in common? The time to close. With this first setup, this is a 5-minute time frame. That's 5 minutes. That's another 10, 15, 25, 30 fucking minutes. 25, 30 minutes to inverse a gap. That is horrendous. I don't want to take this. Yeah, sure, we have the high time frame soup. We have the SMT. But look at how long we're taking to inverse. And then these are actually, you can see I do have executions here. I got this from my old journal back whenever I didn't know how to trade inversions. What am I doing here? Look at this gap. Look at the time to close. Look at my stop loss. Is this good manipulation? Is the low of day going to look like 2 equal lows followed by all of this LR? Now, obviously, this LR happened after my entry, but still. Equal lows. And then look at how we're reacting off of this gap. We wick it once. Don't close through here. Just printing wicks. And then the candle that does close above, as in this one, yeah, it was somewhat healthy, but is it that nice? And then this next candle just prints a huge wick. So, such a bad entry. Look at the time to close. It's absolutely mid. Imagine your high time frame key level is right here, and it's losing to a low time frame key level. Your 30-minute fair value gap should not be losing to a 1 minute ever. And if it is, then guess what? That's not the trade for you. And then the same thing here. We had that stop on. I don't have the key level marked, but we hit that key level. And then just look at how we're inversing. This is obviously we interacted with it before, but after this stop hunt, why are we still stalling? And more so, why did I take this? This setup is so bad. But this was like years ago. So obviously very, very bad setup here. And it's mainly about the speed and how we close to the gap. That's going to be the main thing here. And then again, with this final example, okay, what is my stop loss? Well, it's trend line lows, so that's not good manipulation. And then on top of that, look at that close, right? This is, I think this was this seems to be the 15 second, but obviously it's relative to the time frame. It takes 1, 2, 3, 4, 5 candles to close through this. That is horrendous. You do not want 5 candles to close through your fair value gap. It should be 1 to 2. I'd say like anything more than 3, and I'm like, all right, what are we doing type of thing. So yeah, that's what your bad IFVGs would look like. And then the key takeaways. So this video really isn't too long. I'm not here to waste y'all's time, but this is what I do want y'all to take away from this video. The number one thing, there's a reason that this is number one. It is the close. The time it takes to close through a fair value gap and how far above/below the closure is are the key components to look for to filter out bad setups, even with good criteria. Look at this, right? All of these setups closed through the gap, but the speed and how we closed through them were atrocious, and that's why they lost. It's so important to consider the close whenever you take these inversion setups. Please do not just pattern trade the close. And then the manipulation and the stop loss, you can see this here, right? What is my stop loss defended by? LR. What is my stop loss defended by? LR. Even with this one, LR. Like this is just slanted high after slanted high after slanted high. And this was the 5-minute time frame. Imagine the 1 minute. And then here, this is the only one with like an okay stop loss. But then look at the close. This gap was already interacted with back here. And then we manipulate, and then we still can't close through it. So very, very bad here. But yeah, the stop loss, if your stop loss is not high resistant, you will get reswept. I promise you. The same thing goes for if your stop loss was put in just before a high time frame candle opening. Like if your stop, or if your entry is at like, let's say 9:59, chances are your stop loss is going to get swept by 10 a.m. open, and then we run because we have to manipulate. So this is number 2 in the takeaway. And then the target, this is just logic and price. Like if there's no clear reason why we should go to your targets, whether it be low resistance, the range needs to be rebalanced, or we're having clear manipulation and like reacting off of your POI, then price is never going to go there. There must be logic in why price should go to your take profit or just your target. And then trade management. There's a lot of ways to go about how going break even, taking profits. I don't really take profits. I just do full closes because it's a low RR, high win rate model. But the main thing is, can we reverse here? And what can you use for that? Well, you can go back here, go to the manipulation. Are we in a high time frame key level? Did we just sweep significant liquidity? And are we putting in an SMT? Those are 3 very, very clear things you can ask yourself if we can reverse. And if any of those are met, I go break even, because why have risk on the table whenever I don't need to? So yeah, the last one is going to be, is my entry defended? This is like if I want to hold past an SMT or a significant sweep because of conviction, or I just really believe in the trade. I'll usually base it off of if we've made new imbalances. So hopefully in the winning setup, yeah, like right here, I think I went break even after we like created this fair value gap and this fair value gap. That's a good time to go break even. Why? Because price has somewhere to react off now, right? If price wicks up, we can react off of this fair value gap. And given the fact that my bias is right, or assuming that it is, we should respect obviously the aligning bias fair value gap. So we'll react off of this defense that showed up for you and then distribute lower. So that's what I mean by that. And yeah, that's really it. There's not a lot to, figuring out good versus bad. But if y'all do have questions, let me know in the comments below and I'll help y'all out. And yeah, that is it. Ignore this. Low key forgot to delete that off the template, but I really hope y'all enjoyed. I actually kind of enjoyed making this slideshow. It like felt like school again. But yeah, make sure to subscribe. I'd really appreciate it. And let me know any questions that y'all got. So appreciate y'all watching.